Good afternoon, financial professionals. Abby Fletcher here of E4 Insurance Services, welcoming you to the BREW, Building Relationships Every Week. Thanks for tuning in today. For those of you joining the BREW for the first time, we like to start the BREWcast by celebrating today's National Day for March 3rd. Today is National Anthem Day. March 3rd commemorates the day that the United States adopted the Star-Spangled Banner as its national anthem. Written by Francis Scott Key, the Star-Spangled Banner became the national anthem in 1931. Fun fact, did you know that there are 3 more verses in the original song? Today, get out your trumpet and sing the Star-Spangled Banner. Today on the BREW, as part of our Technology and Process series, we have Rich Engebretson and Cary Parker, who serve as partners at WealthStar Alliance. Today, they'll be sharing their software that integrates with CPA accounting systems. Their company blends data analytics with data mining, allowing us to maximize our CPA relationships. Take a look at the chat box below. I'll be keeping a lookout while Rich and Cary are live. Also, the entire audience is in a drawing for a free continuing education course, and we'll be announcing the winner shortly. Thanks for tuning in, and without further ado, Rich, welcome. The mic is yours.
Okay, well, thank you, Abby, and we appreciate the opportunity to talk to all of you about the working with the CPAs. I think just as a brief overview, WealthStar Alliance, we've been working with CPA firms for well over 25 years, and but don't hold that against us. But it's we've done it successfully in many places, and the situation with working advisors working with CPAs, obviously you know, but they really need a management platform in order to identify client opportunities in the CPA's client in their group of clients. And so what we've got, or what we're going to show you this morning or this afternoon, I guess, for most of us other than the West Coast guys, but is a tax software program that we integrate into a CPA firm that ties into their tax file that they use for their tax clients. And you'll see how we're able to slice and dice that information in within the CPA firm. And so Cary is going to actually do a brief demonstration of the software, and we'll just go from there. And then hopefully at the end of the time, we'll have a chance for some questions and answers, as Abby said. So with that, Cary, you want to jump in and take over?
Yes, thank you, Rich. Hopefully everybody can see my screen. I have a pie chart up on the screen. One of the things that we do is, as we meet with financial advisors who are working with CPAs, they'll handle the introduction and they'll introduce us to the firm, and then we'll go through a demo similar to what we're doing today. What we actually do is go into their tax software and create an export file that we install on another PC in their office. So an important part of this is all data always remains inside the CPA office so they can control the confidentiality and the management of that data. We pick about 40 different fields, okay, that really cover different financial scenarios so that as we start profiling clients, you know, we can understand what clients might meet a particular profile that you're looking for. Now, as I said, all the data stays inside the firm, so they're controlling, you know, the client information. After we've done the export from the tax software and import it into our program, we usually go through a little demonstration for them, and this is what I'll show you now. This area that I'm showing you, I call the dashboard. One of the things Rich and I learned about 15 years ago when we started working with firms is, you know, oftentimes we have an asset or a relationship inside the CPA firm. But if it's a multi-partner CPA firm, or if it's a multi-office CPA firm, we don't have, you know, the luxury of knowing everybody in those locations. So we don't get the introductions of clients. You know, we try to sell ourselves on our expertise, but yet we're still at the mercy of the CPA deciding who they're going to refer to us. So this program allows you and allows the CPA or the managing partner to do a profile analysis, okay, so that they have a good understanding of not only the client base, but then the assets underneath those clients. So this first screen is strictly clients by age group. And you can see here, 54% of my clients, and this is a demo database, but 54% of my clients are over the age of 71. And we typically call that, our estate planning client, okay, or, the RMD client. I mean, typically the firm might be talking to them a little bit about certain things from a tax scenario, but this is usually the wealth transfer area that we're dealing with. The 61 to 70, the purple here, ends up being what we call our at retirement group. This is either the people that are retired, thinking about retirement. The CPA is usually having the conversation about, should I take Social Security? Shouldn't I? How much do I have in retirement? Should I be talking to an advisor to make sure I don't outlive my retirement? So those, obviously, you understand that profile and probably meet with many of those clients. The 46 to 60, we block off as the wealth accumulators. They're two-family incomes, still building wealth, saving for college, may have some other areas that they're focusing on or need help on. And then we separate 45 and under. Now, somebody that's 43 making $500,000 a year is going to show up on our reports. But I break this down into these quadrants so that the firm realizes we don't need to be all things to all people. But as we go into these reports, we'll be able to separate things. For example, we'll be able to look at clients over the age of 71 that are getting RMDs over $25,000. And I'll show you how we do that. The next screen talks a little bit about AGI. Now, this starts showing you and the managing partner information by partner. Okay, so you should see a new slide that says AGI by partner. Bob, you can see, has 18% of the AGI. Arnie has 21. What we're doing is showing wealth through income by each partner. Okay, where we start getting more interesting is in dividend income. We can look at taxable dividends and qualified dividends. So if Fred's my link to the firm and he's only got 2.9% of the dividends, which amounts to about $300,000, my focus needs to be to get Fred to introduce me to Arnie, or to Clyde or to Jim, that they're sitting on, a couple $1 million worth of dividend income. Same thing with interest and taxable interest. You think this stuff is readily available to the CPA firm, but they don't think about it unless they've talked with one client, and our goal is, if you talk with one client, give us that profile and let us see how many other clients fit that same idea. Then we'll look at IRA distributions, both taxable and non-taxable, and pensions and annuities. So when we bring this in, the firm likes to look at this information because they understand the mix of client wealth, age of clients by each individual partner. The report writer is where kind of the rubber hits the road. If we were going to do maybe a policy review, we might want to go in and create a custom report. And I could call this policy review. And maybe I'm interested in clients that made over $175,000, but are between the ages of 55 and 65. Here's my report. Now, a couple things in this policy review report. We do break it down by office. So this was where I was telling you, if it's a multi-office firm, the benefit of this is you're going to get the clients in Atlanta that fit that profile, the clients in Chicago, the clients in Miami. And what we break down is not only who the preparer is, the client name, the age of the client, the AGI, and then we also look at taxable interest, tax exempt interest, and taxable dividends. So it gives us a quick snapshot, of the clients that meet this particular profile. And this gets pretty interesting, as we start looking at different areas. Excuse me, our IRAs. I worked with a firm 2 weeks ago that was looking for clients that were, pulling down in the neighborhood of a $20,000 IRA, but they only wanted to talk to clients over the age of 70. Because they wanted to make sure that they were insured. And so you can see here's my preparer, here's my client, here's the client name, here's the AGI.
Hey, Cary,
Yes.
we're not seeing, I apologize for interrupting, but we're not seeing what you're seeing right now. We're seeing the data type and all the lists, but not the actual report. There we go. Thank you.
Does that say IRA taxable with age analysis?
It does.
Okay. I apologize. Evidently, I have to share each time I change a screen, so I was not aware of that. So, what we're doing is trying to provide to not only the managing partner in the firm, but also then, to be able to talk with the advisor that's working with the firm so they can understand what clients under what preparer hit that particular profile. And we can see here that what we're looking at, in addition to the client's age, is the AGI, who has the IRA distribution. And then obviously from the taxable column, we can pretty much tell if that's an RMD or not. So there's a number of different reports, that really help profile, information for you as you work at the firm. And, we can pull those through various levels of AGI. We can pull those through capital gains, charitable contributions, dividend income. What we do with all this, is actually create what we call a firm analysis. And I'm going to show you one of those. This analysis is a summary breakdown.
That didn't pop up yet, Cary. There you go.
Can you see it now?
Yep.
Just took a little bit. So what we do here is we do a breakdown so that you as an advisor has a breakdown of what we talk about as the tax return wealth. And then the managing partner has a breakdown that we can do again as well. And we'll look at some key areas. We're going to look at AGI, but we're going to share with that firm, how many clients have over 500,000 in AGI, how many are 250 to 500, how many are at 100 to 250, and so on. We're going to look at the age groupings. This becomes critical, especially as you have a partner nearing retirement, because typically most clients are within 5 years of the age of the partner. And if I'm retiring in the next year, I may have a lot of older wealthy clients that we got to make sure we transition to the right partner. And we usually use wealth management to help that transition process. So here you can see 24% of my clients are over the age of 71, 17%, 61 to 70. So that's 41% of my clients are over that retirement age. So if you think about it, if I'm leaving these people to young partners, they've got a little bit of work ahead of them to kind of gain that confidence of that older, wealthier individual. We can look at individual items. We help the firm understand interest income. If I've got $3.9 million of taxable interest on line 8A, and that's principal at 1%, which we know nobody's making 1%, I could have at least $400 million of principal sitting in my client base under interest income. Same idea with tax exempt interest. And we look at taxable dividends. I've got 8.8 million, and it's a 2% type of dividend scenario. Then I've got close to 500 million sitting in investments that we can also look at clients from a policy review standpoint and from an investment strategy standpoint. Last couple things I'll show you. I like looking, because so many firms have clients that are at retirement age. We're going to take a look at IRA distributions, and we're going to take a look at pension annuity distributions. And we can change the threshold. 20,000 is about a $500,000 IRA. We can up that to 40,000 if we want to see clients with $1 million. Where this becomes interesting to the firm is we start putting that income back in these age brackets. So if we look at the interest income, the exempt interest, and the taxable dividends, I've got 7 million, which is 56% of the tax return wealth sitting in my firm. And 61 to 70, I've got another 22%. Now, the reason I brought that up, these two areas here show we have 77% of the wealth sitting in 41% of the clients. So this is where the firm starts taking interest in saying, how are we marketing to these people? And are, these younger millennials or younger people children of those higher net worth clients? Because we know when mom and dad die, that money goes to the next generation. So we'll really use this to create a marketing plan where we help profile what clients they should be introducing to you so that you can help them build kind of a family plan so that they also bring in the next generation to the CPA practice. So it gets pretty in depth, but it's very straightforward. The firms understand it very readily. And the real goal with this is to try to create a lead program, in the neighborhood of about 12 to 16 new introductions a month. And we do that proactively, by not only, going through this firm analysis, but then in the program, we've even got a letter writer that if they don't meet with other clients, like they haven't in the past year, we can do personal letters, and they can hand pick, the 10 or 15 clients they want to reach out to, and we can send a letter to those clients suggesting that they meet with you, and start talking about either insurance policies or reviewing policies to make sure they meet their income at this level. So that's a quick snapshot. We're more than happy to kind of work with you guys in any way that we can. We've got a lot of follow-up that we can do individually if you're partnered with a firm. Now, I did add, and I don't know if you can see it or not, but I did add our email addresses and telephone numbers on the slide. Is that viewing now?
Sure
Yes.
is, Cary.
Okay. So, let's open it up for some questions at this point. And if a question comes up later on, you can always email us as well. Abby?
Thanks, Cary. Great share. I do have a couple questions from the audience. So the first one is, does WealthStar software get installed on the CPA office, or is it connected to a cloud, or is it standalone?
Yeah, no, I've kept it as a desktop application. Mainly that way we don't have to manage the data. And we do pull in some proprietary information. For example, I use the client's social security number as the file name so that we don't duplicate imports. It will only import one social security number. And so I go over all that with the firm prior to installation so they're comfortable with it. And, it really is better to let them control the data rather than us worrying about having to control it in the cloud.
Thank you. Thank you for that question from the audience as well. Next question, how do most successful advisors introduce your concept to CPA firms?
Well, I'll talk and then Richard's going to jump in. The individuals that we're working with typically will do a demonstration, a little bit more detailed demonstration with the advisor. And then the advisor already has the relationship. Okay, this works where there's already an ongoing relationship. Don't use this to kind of create that relationship, because it's got to start with you and the firm and being on the same wavelength in terms of what they want the client to accomplish with their clients. When we've got that kind of relationship, they introduce us. They'll set up a demonstration that we'll do a WebEx. A year ago, the advisor was always in the firm with the CPAs when we did this presentation, but we can do it remotely with everybody as well. And then at that point, because the advisor is introducing us, it's more of a, formal introduction, and they're willing to go along with what their advisor is recommending. And then once they see the detail, that helps sell them on the program.
Yeah, and I think that's probably one of the major advantages is a CPA usually looks at things client by client, and so the advisor, when they are working with the CPA, just take what's coming off the top of the CPA's head, and now they're seeing all their clients listed and what kinds of opportunities are there. And if any of you have been working with CPAs in the past, chances are you haven't had a lot of success, because mining the data is one thing that CPAs haven't been good at. And so this brings it all to the forefront. And so you as an advisor or your advisors can develop a game plan. We call it a practice management program that identifies the clients to be spending time with and get meetings together with them. So it kind of puts to the side this whole thing about CPAs don't really know which clients apply to wealth management, and now they have it all at their fingertips.
Good one. Good one. Thanks, guys. Another question, more questions. Best practice. How does the CPA receive compensation? And then a step further, does the advisor typically share in this compensation, like a finder's fee for the introduction for your software?
Yeah, I can address that. Typically, obviously the CPA has to be licensed for the type of activity they're going to get paid on. And typically we see a split between the advisor and the CPA. And what most of them do is a 50-50 split, because it's hard to argue about who's doing more work when you really have a partnership going, as opposed to, well, one gets 10% and the other gets 90%, and what are you doing for that? So we found that 50-50 works well, but there are situations where the one side just is going to do a limited amount, and then the payment obviously doesn't justify a 50-50 split. But it usually is, the relationship between the advisor and the CPA, and pretty easy to come to terms. We haven't seen too many problem situations with how they're splitting the revenue.
Thank you. And can this software be used with our tax-oriented advisors that are not CPAs? Like I said, we have a couple advisors that are focused in tax preparedness.
Depends on the program that they're using. Since we have to create an export out of the tax software, depending on the software program, yeah, we have, relationships with just the national public accountants. So not everybody has to be a CPA. It's just we usually coin the preparer as a CPA because a lot of our advisors are working with the CPA firm because they have the business clients, as well as then the 1040 clients. So no, as long as it's a practicing firm, or even some attorneys that do taxes, you might have a relationship with an attorney as well. So if they're doing preparation of either 1040 or business returns, typically business returns, we're looking at who's contributing to pension and pensions or retirement plans, as well as certain key areas in the business world. But most of it focuses on the executive of that firm.
Okay, thank you, Cary. Lastly, I've had multiple questions like this. Ballpark, how much does it cost for a firm to use the WealthStar program? Is it a service? Do they purchase the software? Everybody wants it.
Well, I can start with that, and then Cary, you jump in. We typically charge a upfront fee to do an installation. We have outside costs of computer programming and those kinds of things, and but we're relatively flexible. The lowest level would probably be $2,500, and usually it's $5,000 to $7,500, and then we get paid a percentage of the override for insurance products only. We do not participate in any registered product compensation. And but like I said, we work with the specific situation, looking at what the potential is, what the opportunities are, and obviously working with E4 and how they want to structure it. We're flexible from that perspective.
Thanks, Rich.
We do recommend making sure that the firm has some commitment to cost, okay? Because we've done this previously with the Money Group. We worked with AXA, and a lot of times they would pay the fee, and then it was hard to get the firm to do anything. So we got to where let's share in the cost, because then that way everybody has a vested interest in success. And our real goal is to help that firm generate, really $100,000 to $200,000 a year. And so if we can bring that to the table and they're spending, a couple $1,000s, then it's well worthwhile. If they don't spend anything, then oftentimes they don't have the commitment that we need to make that advisor successful.
Well said, Cary. And thank you both for being on the BREW today. We've had an action-packed call today. I'm going to alert the audience that if you were dialing in via audio, we do record the brews, and they will be put up on our YouTube channel later on today, as well as a compilation of some slides from today's brew. Cary, I'm going to ask you to draw a number for our prize.
How about number 9?
Okay, number 9. Who's the winner? Let's see. Oh, Dave Halverson, congratulations, sir. Be on the lookout for an email coming your way with a complimentary CE course from all of us here at E4. Thank you for joining. And be on the lookout next Wednesday for the BREW. We'll be showcasing our design team here at E4 Insurance Services and how they get us set up for success with case designs and product awareness. Thanks, friends. Happy 2021 and make it a great day.
Thank you.
Thank you.